There you go.
Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on September the 10th, 2017. In this edition of your weekend video newsletter, we'll talk about the indices, all of which reversed course slightly last week. We have the S&P 500 up 9.94% year to date, and the NASDAQ up 21.58% year to date. Earnings are good, market's still in an upcycle. However, we are seeing signs of some flattening in bonds, specifically in junk, also in the tick for the NYSE and the comp. In addition to that, we have breadth also flattening out at a high. We saw that most notably in the tech stocks, FANG in particular. The put-call ratio is somewhat bullish, but it's in the mid-range. VIX is just above its 50-period moving average, and VIX VXV is in a mid-range with no signal. US dollar was lower last week. That should be a good sign for multinational companies. However, the yen is breaking out the top of a range and boogieing higher. It's above its 9 and 20 EMA. Yields are lower. The 5-year had a dramatic drop last week. The 10-year pretty much the same. And we had AGG higher. TLT weekly broke out of that range that we talked about that we might see last week, did come to fruition this past week. So UST is at 52-week highs. We got gold bullish. The 1377 target from last week was nearly tagged. Crude is still in a sideways range for the 6th week, and copper took a 3.24% hit on Friday. The heat map rotation is mostly bullish. Biotech, metals and mining, retail, building and construction. So keep an eye on those for potential setups this week. International markets have been becoming more bullish. Brazil has been the biggest gainer last week. Russia was up mildly. China is at a double top on the weekly, the Hang Seng. Make sure you check that out. We'll look at these IBD 50 stocks for potential. And Bukowski is showing 5 of 5 green, with transports needing to catch up with the rest of the industrials and utilities. So there's some potential there in the transports. We also see his CPI signal at 61.9%. That's neutral. And we have his signal green since 8/24. We have 8 bearish setups, 13 bullish setups, and 176 waiting for breakouts. So it's the latter number we're watching for potential. We could see some more rotation this week, and pretty much what we're looking for going into mid-September. Okay, let's start off with the spiders for a moment. We have the potential for a double top or a lower high. We also have support down below. And most importantly, what I'm watching is this one candle right here. That big down day that we saw several weeks ago. We moved above it. Now we're sitting on top of it. Buyers are stepping up at the 9 EMA. And unless we lose these moving averages, we should bounce, I would think. If you're bearish, you're looking for these pivot highs to hold. And you're also looking for increasing bearish volume along with stochastics to continue to drop. You'd also want to see MACD turn back down, not stay above the 0 line, and tick cumulative cross over to the downside. So right now, it looks okay, but it does look like there is some distribution, perhaps maybe some rotation. Overall, this chart is pretty neutral at the present time. It's not bullish, it's not bearish, although we do have price action above the 9 and 20 EMA as well as the 50-day. NASDAQ also managed to hold in this zone, though it did take quite a hit on Friday. We also have the NYSE in an upcycle, as we've pointed out over the last several weeks. Selling into strength turned into buying and weakness. This continues to push higher. There's a potential that we could start to flatten out a little bit. However, we also have the potential to break out. So it all depends on price action this week in addition to breadth, which also gives us reason to pause. Okay, so we're at highs and we're seeing breadth taper off somewhat. This could be rotation. We won't know until this week. If this starts to dip back down into the red zone and breadth starts to deteriorate, we can look for lower prices. However, if it turns back up and we see more advancing stocks than declining stocks, that'll give us an early indication of which direction we can anticipate for this middle of September trade. Bond yields have been moving lower as well. In this case, the 5-year continues the drop we've seen since this July peak, with the 10-year also doing the same thing, which isn't good for bank stocks. If we see a pivot and a move back to the upside, anticipate that banks will move off of those current lows near support, while also keeping an eye on the long yields, which the 30-year, of course, mirroring what we're seeing on the 10-year. The US dollar has been weak. We continue to see this downtrending channel hold price action at bay. The 50-period moving average overhead dropping pretty quickly, along with the 10-period EMA. We have seen wicks develop. However, we exhausted that previously and dropped, so no reason to believe that this can't do the same. Bounce, get rejected at the 9 or 10 EMA, and then drop again until we get back above the 9 and 20. In addition to the 50-period moving average, the trend is down in the US dollar. As the dollar does move lower, gold has responded by moving higher, nearly hitting the 1377 zone that we projected on the weekly. The 9 and 20 continue to ramp higher. Note SOTMA is nice and bullish, greater than 45 degrees. RSI is showing muscle. Nice volume coming in. MACD showing that bullish momentum. And stochastic is a little bit overbought at this point on the daily time frame. Gold monthly, however, does show this volume by price breakout support now that we've broken through resistance and a longer term trend line, in addition to RSI rising with volume, MACD, and stochastics pointing higher as well. This looks like a bullish continuation, especially if the dollar continues to move lower. So as we look for areas to trade, we need to keep an eye on these chartreuse colors as we watch this cycle from red to yellows to greens develop. This looks like rotation at the present time. If you recall what I was talking about on SPY with tick cumulative flat, and at highs it appeared to be either rotation or distribution. Right now it looks like rotation out of tech into sectors more closely related to the consumer. If we focus on the sectors that more than likely will outperform this week, we continue to see strength in metals and mining, consumer discretionary, retail, healthcare, biotech, and building and construction related names. So focus on those names this week. And if you're trading in the international groups, with Brazil leading, Russia doing well, and China showing a double top on the Hang Seng weekly. Considering everything we've discussed thus far, IYT actually looks the best in a lot of ways. Price action, testing the 50-period moving average, pulling back to the 9 and 20, finding support. Volume by price support just down here a little bit lower. Following through, looks like Bollinger Bands are going to start to open up. We could grind higher, RSIs rising. Watch your airlines, truckers, and rails. There'll be a lot of emphasis on those names over the coming weeks, I would imagine. Stochastics turning higher, and MACD is above its signal line. Watch for MACD. This is crossing over. If we get a continuation day or two, we should take out the 83 level. About a $10 measure move on this, so 93 and change. If this does make it back above these levels, in an area of no overhead supply. Okay, traders, that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com for our friends down in the southeast. With the hurricane coming your way, take care. I'll send out the watch list in a little while and get outside with my family and enjoy the day. Probably going to go apple picking and perhaps buy a fresh apple pie. Take care, and we'll talk to you soon.